Hello traders, hello everyone. Can you hear my voice? Is everything working well? Okay, so we will begin in a minute. Just let me turn my phone off, or better not turn my phone off, just on mute. You never know when wife calls. Okay. Um, okay, traders. So I hope that everything works well. It looks like that on TradingView and YouTube we are live, and also we are streaming to Twitch as well. So if anyone has a Twitch account, you can also watch us there as well. Okay, because TradingView obviously offers this option. Okay, so what's going on? Well, you know that obviously the Fed is doing all what's needed to help banks with the liquidity issues, and they said and announced this weekend that they will offer daily swaps to the Bank of Canada, Bank of Japan, Swiss National Bank, and the ECB. So what this actually means that if one bank will have any issues with their liquidity, obviously there will be Fed who will give them this money on a daily basis if needed. Okay, so this actually is somehow they confirmed that banks obviously are in trouble. Okay, and that they are worried that this could be a new recession coming, and you know that financials could be could obviously lead to disasters on plenty of sectors. So looking here at this financial ETFs, we have seen a pretty strong move to the downside, and I'm somehow still worried that this could impact the other stock market. You can see here that correlation obviously is tight, but it's not stocks. However, the S&P 500, that's actually SPY in general, is not that aggressively bearish. Okay, so what I'm thinking thinking out loud here is that maybe we will see a retest of these lows here, and then on these financials, and then when we will see a bottom, we will see actually a new low, but here we could see a higher low. Okay, so this could be some kind of a divergence. Okay, and usually when you see these divergences, they can have a very strong actually conviction that markets are ready to turn if these divergences will form at the highs or at the bottoms, because as you know, markets will not always form highs and bottoms at the same time. And we actually, let me see if I have this one here. Okay. You can see here that we had one divergence for a potential top here back in 2018. Okay, so the S&P 500, that's actually the futures contract, printed a new high. Here we had the lower high. Okay, and then both moved even lower. Even here we had at the bottom, you can see that here financials were forming a higher high. Here on the futures we had lower low. So actually not higher high here, but higher low on the financials. So actually I'm observing this kind of activity and this kind of a potential price action here as well. I still think that there can be Fed this week that will try to calm down the markets. Okay, so there is a chance for expectations actually for 25 basis point increase, but I would not be surprised maybe if they will, some even think that they will stay on hold, okay, because everything what's going on. So if that would be the case, then you know that this could be supportive for stocks. Okay, maybe not really any kind of a strong rebound, because if there is a recession, then stocks at some point will see firstly a strong drop, and then they will try to stabilize. So maybe stocks would not see any kind of aggressive bounce to the upside, but at least current weakness on the US markets could then slow down for a bit. So I'm still thinking that the S&P 500, if you look at this wave count, I still think that we have a very valid wave count here that could shows a potential flat correction in wave in wave B or wave 2, and that was wave A. Wave B rally to new high, and now you are in wave C. So very nice support still here at these December levels. So I want to see this price retested, spiked out, and then market to turn higher. So far, what I see on the intraday basis, looking at here, this is not really impulsive to the upside from that recent low. So I really have to respect what the market is doing. Maybe this still at some point, of course, can see a change of the wave count if the market changes or moves strongly to the upside. But so far at this point, this really looks like a correction. Okay, so I'm still thinking that there can be more weakness coming. Also, looking at the VIX, known as a fear index, still has a room for move to the upside, and somehow even of everything what is going on for market to bottom, it's something, it's always, they will have much better chance to bottom if something seriously and will happen. I mean, like cryptocurrencies, for example. Before this FTX, we have seen cryptocurrencies trading at some very interesting levels, and then we have seen, boom, this FTX collapse. And what actually happened is that markets overall became even more pessimistic, and that's when there is a greater chance that market will actually do the opposite. Okay, so still I do not see this kind of activity on stock. So I'm aware that maybe we just have to be ready on this, and then a major reversal could follow. But I still think that this year, by the end of the year, stocks will be trading higher, in my opinion. Of course, Fed will try to defend any aggressive sell-off, and whenever they will announce any kind of a dovish view, that's when stocks will try to stabilize. Okay, so for now, we are still not there yet. I'm tracking from an Elliott wave perspective this flat correction, looking for potential wave C, as I said, to maybe to retest these levels and then reverse higher. That's the primary count. Now, if we go with more aggressive bearish look, that's ABC, wave X, and another potential ABC formation. Here could be moving to the downside, especially if this support that I'm watching as a potential next rebound, if this one is really not going to hold and rather we will see a sharp sell through, then obviously this wave count is also possible, and that's when a lot of pessimism will be seen. Okay, that's when a lot of fear will show up, and we know what will most likely follow next, right? We know that when least expected, after this massive drop, market will turn. So for now, stock somehow sideways, but I'm sure that we will have more clear views after the Fed this week. Now, if we look also on crude oil has seen a very nice, almost perfect reaction, textbook move to the downside. If you were in our webinars, you know that we've been tracking this triangle for a while. It's been actually a range for more than 3 months. Okay, and sometimes the Elliott wave theory, it just gives you an edge to know where or when to expect the breakout. When everyone thinks, okay, this is a range bound market, we are not moving, well, that's when we could actually be one step ahead of others, especially if we know the patterns. Okay, so back then we were looking for this triangle to unfold in a wave 4. It played out very nicely. That's actually already a May contract now. Okay, because this one, the April expires. So what we have seen, a very massive move out of a triangle. Now everyone sees again crude oil in a bear side, but keep in mind that moves out of a triangles are final in the sequence, right? So now when majority see that this breakdown is actually happening, that's when again we should be aware that maybe we are approaching the support, because now again everyone seems to be turning very, very bearish here, on obviously on stocks and energy as well, because we think that the demand for crude oil, obviously because of economic activity, is decreasing. So still looking at the wave count itself, now for a fifth wave you have two targets, okay, when the price moves out of a triangle. The first target is that you look for a triangle measurement from end of a wave E. Okay, so what I did is I took the widest leg within this triangle, and that was from wave A to wave B, because it looks like that was this running triangle. So I projected for potential $65-64 per barrel. You can see down here. But then you also should look for potential triangle measurement from a breakout point, and this one comes in around 57. Okay, so 57 is the important level. Above that right now is obviously 64, and now if you look here on a daily, you're also here that projections will take you back to these levels, swing lows from 2021 August and December. Okay, and this is around 62. So obviously we are moving into some very important levels here, and again we are coming out of a triangle. Triangle is shown here in a wave 4. We know that markets move in 5 waves. Okay, here looking at this motive structure, so we can expect that sooner or later this sharp drop will come to an end, and I would not be surprised if in the next few weeks, few months, we will see again crude oil turning to the upside. Of course, this will have even easier chance to ride for prices to rise if we are going to see maybe that Fed will stop with hiking rates or even turn dovish. Okay, because obviously this could have a positive impact on commodities. If crude oil would really trying to stabilize, maybe already this week, then you know that maybe CAT, which has been quite bearish lately, could finally see some kind of a recovery, but not really. I mean, I'm not expecting anything significant, but just be aware that there can be some kind of a correlations, because we have seen CAT moving to the downside now when crude oil also fell out of this triangle, of course. So if stocks will try to stabilize after the Fed, if crude oil is moving into the support, then maybe there can be some interesting setup still. I think that a Kiwi, for example, is one option. I think that we have a pretty nice potential bullish formation here. Now, if you look at the price action here from 2022 lows, you can clearly count this in impulsive fashion, because it was a very strong move that erased some of the losses here, okay, that occurred through that same year, earlier that year in 2022. And what we have seen so far is a very nice pullback. We've been looking for this pullback for a while, and looks like that this can be a flat correction, because wave B moved to a new high only for temporary time. And then we have seen a retracement for 38.2%, where market is trying to stabilize. And if you look now here, on the 4-hour chart, okay, you can actually see that price recently came to the upside out of this wedge formation. Okay, could be even an ending diagonal, could be maybe even leading diagonal, but the important is that we came out of a wedge formation, and normally when this happens, it means that market can be changing its direction, even if just temporary. In such case, I would be looking for a rally, not to wave 4 only, but if it's leading diagonal, let's go with the alternate view, you could see the minimum reversal back to the area of a former wave 2, which is here, okay, around 63.90. So I think there is room for more upside. Also, if you delete these wave counts for a bit, you can see a potential head and shoulders bottom formation as well, right? And now we are testing this potential neckline. So I think that again there is a chance for more upside, especially if the stocks okay, will try to stabilize, okay, because we have Kiwi quite strong here compared to the stock market. So if this S&P 500 will try to stabilize, I think that Kiwi could have a very nice move higher here. Okay, another pair that seems to be turning to the upside after recent corrective pullback is pound, right? Okay, so pound, we have been tracking this pullback, and so far it played out very nicely. We've been looking for a retest of January lows, and if you look here, this reversal, bullish reversal, is somehow similar to this bearish reversal that occurred here at the top. We talked about this in our past analysis. Okay, so now what you can see here is that we have a pretty nice strong recovery, much stronger move in my opinion compared to this bearish structure. So because of this bullish reversal, I think that we could see more gains. I'm not sure if wave 2, wave B is already finished here at 1.2 level, or maybe we are going to see a flat, but in either case, as long we are trading, I will move this, as long we are trading above that latest low, I think that pound has a great chance to retest these 2023 highs, especially if Fed again will be obviously dovish, then yields could fall further, and this could potentially make bearish case for the US dollar, and the pound could rally. Okay, so I think that this one is looking pretty interesting. Also here on this kind of a ETF, you also have a very nice bullish reversal pattern. It's the head and shoulders bottom formation, so I think that even this one suggests that we could potentially see more gains here. Okay, let me check my list. Let me take a look on gold. Okay, so if you were tracking some of our free analysis, then you know that we've been tracking this big flat formation from 2020 highs to be just a counter trend movement within uptrend, and so far it looks like that we are going to attack these all-time highs. Okay, but before we go to this maybe a smaller time frame analysis, let me focus on this ABC flat correction. So what is a flat correction? Again, it's a 3-3-5 pattern where first leg occurs in 3 waves, like a wave A, and then you see another 3 waves to a new high or close to a new high for a wave B. The most important structure or leg, the substructure, is going to be here always in the first wave A. Okay, because if the first wave A, or when the first wave A is in 3 waves, then you know that this is either a part of a complex correction like a flat in our case, or already finished correction and we go immediately to new highs. Okay, so always when you see high, you see reversal from a new high in 3 waves, you should expect that at some point market will again revisit the highs. Okay, so this was probably the most important structure. Even when we have seen this retest of the highs and then reversal lower, I looked back and I saw that the first drop was made by 3 waves. So it means that the whole cycle is still just a corrective one, and at some point we should continue to the upside. And we know that there were a lot of bearish sentiment here back then when we broke this 1700 area, and look where we are now. So again, the sentiment so far is obviously turning because of fundamentals. We are seeing a lot of speculations that gold is headed to a new high because of traders, investors moving into safe havens. If you are having lower yields, you see lower stocks, and then obviously the Fed, who is just printing money, dollar is losing value, so everyone is looking for safety to be in gold, especially if you also consider the inflation. So it's not a surprise to see a very nice and interesting resumption to the upside, and I think that there is even a chance for more gains later this week. What we are seeing here is so far very nice extended move to the upside. We broke this 1959 level very aggressively. Okay, so I think that we are now in a new corrective phase. And if we know that this was most likely wave 3, because usually wave 3 is the strongest wave, then we know that this is a new ongoing impulse. So after a pullback, we can expect more gains because impulses are made by 5 waves. So what I would do now is probably project and look for potential supports in this wave 4. Blue, who said select blue? Okay. And you can see that the first support, if we compare current pullback to the wave 2 distance, is right here around 1962. The previous high was 1959. So you obviously see that there is a very important level, but this lag was very extended. So maybe you will not see the 38.2%. 23.6% could be enough, especially when you have wave 3 very extended. So still, this whole area is the important support. If we drop back below towards 1900, then I think that we have a new top and that we will consolidate further. But as it looks right now, I think that there is a chance for more upside after this pullback. But I don't believe that we will see bounce ahead of the Fed. Probably when things will calm down after the Fed, when we have more maybe evidences that they are going to be dovish or that they will stop the hiking rates, which everyone expect, that's when we could potentially see a new turn to the upside and maybe even looking for some longs into the 5th wave. But so far, based on time and price, I think that there is room for slightly more weakness here to consolidate further. Okay, now let me also take a look on dollar yen. Okay, so we know that yen in general is the safe haven. You can see here, firstly, I have the correlation here, the correlations here in red. These are yields, and then you also have stocks which are also lower but not that much. Okay, looking here back over the last couple of weeks, and then you have at the bottom gold and Japanese yen basket. So you can clearly see where are the safe havens. So that means that if stocks will continue to weaken, yen will probably see much more upside. But even if stocks at some point will hold the supports, and if the US yields will continue lower, I think the dollar yen is still ready to fall lower. Okay, because dollar yen and US yields obviously has a tight correlation. And you can see here that so far we reversed very nicely from this potential right shoulder stop formation here at the 38.2%, where I compared this shoulder to the left shoulder, and so far we are seeing a very nice move lower. More importantly, we broke this trend line. We have seen this overlap, okay, with this wave A. Why this overlap is important? Well, let me try to label the bullish wave count. Then we will have wave 4 here stepping into the territory of wave 1, and that's not allowed. Okay, it means that market is not impulsive, so it means that probably this was a corrective rise. So I really like this. I really like this overlap. It just confirms the fact that probably we are headed lower. However, again, Japanese yen had a pretty nice move so far, okay, and there can be some new position adjustments ahead of the Fed. I really don't believe that there will be much of speculations into the Fed. More volatility can be expected after their decision. So with this in mind, we have some chance of potential new correction going on. So just be aware that even if we have seen here into a new start of the week some massive moves on Japanese yen, though some of those could be reversed, in my opinion, in the next 24 hours or even 48 hours. So just be aware, don't be surprised if we see a new corrective recovery. Then I would potentially even look for this pattern, 5 waves down, and then expecting an ABC to the upside, okay, before the market resumes lower. Okay, so something like that, and then we see further weakness. So of course that would be very nice structure to catch potential shorts from higher levels. But generally speaking, this pair, in my opinion, is bearish, and sooner or later we should revisit, not we should, but we expect the price to revisit this 127 lows here from earlier this year. Now let me also look at someone asked the question, if you can look at NASDAQ. Yes, I can do that because I know that I was looking at it earlier. Actually, we can also cover Dow Jones here. Okay, so firstly, here on Dow, we were looking for this deep pullback. So far, we retested the lower side of this channel at the 61.8%, but not really, we do not have any kind of evidences that we are completing this pullback, but it could maybe happen by the end of the week. So we'll see how this will unfold, but overall this look very nice. 5 waves up here from that October 2022 lows, and now you have a counter trend movement. So in Elliott wave terms, of course, at some point we would expect a resumption higher, while the market should hold the September levels of last year. Looking at NASDAQ, potentially, if we can print a new high, this could be a leading diagonal. Okay, so I think that the most important level so far will be this high from January, or it was February. From February, at the start of February. This one is probably the most important. It should be taken out to make this leading diagonal valid, because then we would be able to count 5 waves up, and I think that more gains could be then expected after this pullback. But so far, if we do not see maybe this level broken to new high, and instead we see a break to the downside, then we know that this recovery will be seen in 3 waves rather than in 5 waves, and the structure will change. So again, after the Fed this week, I think that we will have some more clarity of what is going on with stocks. But I like the idea that stocks, no matter what happened so far on S&P 500, NASDAQ, Dow Jones, we haven't seen any aggressive move to the downside. Okay, maybe Russell is the exception. I mean, he's trading quite close to its lows. Okay. Yeah, I will look at the euro dollar now. I can do that, no problem. So on euro dollar, as you know, I've been looking for potential wave B correction, and I will not change my views for now, because if you look closely, we are not seeing any kind of a real direction. We are just chopping around from one failure to another failure breakout, right? So what I'm looking at here is still potentially being in a wave B. Now, one chance is that wave B could even be an expanding triangle. Now, this is very rare, but it's possible and it's valid, okay? So you have here waves A, B, C, D, and you expect wave E to retest the highs and then move to the downside. I could even adjust the wave count, look for this to be some kind of a flat for wave B, but the idea would be very similar. Okay, so again, I would not trust these Euro bulls too much. I think that it all depends really on the ECB. You know that obviously banks in the Eurozone have also a lot of issues, and I think that ECB at some point will highlight or confirm that they are done with rates. We could potentially see a turn down on the euro, and this would impact even dollar index. It doesn't really mean that maybe dollar in general should see any kind of a strong move across the board. So keep in mind that whenever you're looking at the dollar, you should look at the whole picture, not just dollar index. Look at some equal weighted indexes instead. Okay, so looking at the euro, I still think that this could potentially be moving into the resistance. 108 is probably the most important one. If we see a spike into that area, I still remember very well how markets turned unexpectedly to the downside here after the US CPI print back in February. So I still assume that we could be moving into these resistance levels and potentially seeing a reversal. So I'm not buying euro here, but the big picture, in my opinion, is quite clear. I think that at some point euro will see more upside, but firstly, the deeper correction is expected based in Elliott wave terms. I think that the very nice support could be around 103, 104 level. Okay, not to mention the potential head and shoulders here, and you're now in the right shoulder. Okay, now let me take a look real quick on Bitcoin and the Ethereum. Okay. Okay, so Bitcoin has seen a pretty nice and aggressive move to the upside. We really should consider that this could be potentially maybe even a wave 3 in the making. Okay, in such case, what you would focus is probably on these equality levels. Okay, that should be your first target, because there's very rarely that wave 3 will be shorter than wave 1, but of course there we can see obviously in normal sequence the extension higher. So here you have around 30,000, very big and important level. So I'm curious to see what will happen up there. Even if you are bearish and expecting only ABC rise, this should be again the same level that we should look for. Okay, so 30,000, very round psychological figure. So be aware of potential some kind of a pullbacks there. And there is still room to retest this level, because looking here at looking here at the substructure from March lows, you can clearly see that we are still in an ongoing bullish impulse. So after the next pullbacks, as long as we are trading here and holding this 26,500 area, I think that this Bitcoin has room for more upside. If we broke this level and overlap, I mean, if we are ever going to see this week drop below 26,000, then I think that deeper correction is going to take place. Okay, looking at the Ethereum, I'm actually tracking two wave counts there. Now, the first one, obviously similar, same like Bitcoin. Potentially more upside could be seen if we are really in wave 3 after this pullback into the wave 2. So more gains here could be expected. But looking at this 4-hour chart, nothing really that impulsive. It's somehow the price is struggling here. So that's why I'm tracking two potential wave counts, because normally when price is struggling and you have this kind of overlaps, it's not really what you want. So I would also have this one on the radar screen for potential fifth wave. Notice that we can very easily count 5 waves up as well here. Okay, you have here waves 1, wave 2, extension for a wave 3, wave 4 pullback, and you are now in a wave 5. So if suddenly, let's say that Bitcoin really stop at that 30,000 and see a sell off, and Ethereum will be just chopping around here, nothing really make impulsively to the upside on the intraday basis, then I think that we should be aware of potential higher degree new correction before uptrend resumes. Okay, so at this point, maybe short-term longs, some intraday longs, they could do well, but maybe for some midterm trades that could last for months, I think that it's better, safer maybe to wait on the next deeper pullback. It's same with Ethereum, Bitcoin, and obviously on other altcoins as well. Okay, I hope this makes sense. Someone asked where gold can go. Well, I think that gold can go to, as I said earlier, the recording will be available, so gold can go, in my opinion, to new all-time highs. But firstly, just be aware of the pullback towards 1940, 1950 area. Okay, someone asked for EURCAD. Let me take a look on the EURCAD. Okay. So EURCAD, if you just look, I mean, the most important is whenever you're familiar with the Elliott waves, that you recognize the wave structure very fast, okay, in just a few seconds, and you can clearly see that that this is a very strong move, so possibly an impulse. Okay, so you would label this most likely like that, and impulse will have an extended wave 3. An extended wave 3 will have 5 waves as well. Okay, so we can do that also here. So we know that after 5 waves, what market will usually do is slow down. So if this will happen right from here or from higher prices, we don't know that. But we just know that as I look in this chart, that price is a little bit overextended and high, and it's probably not good area to buy at this point. It's bullish, but I would prefer to wait on a pullbacks. You're also here chasing these resistance levels when looking back at December and February highs as well. Okay, so definitely some overbought conditions, so watch out for potential free waves pullback. And obviously next support would be on a dip around 142.40. So for now, I think that there is a fifth wave, still maybe searching for the highs, but just be aware that there can be some pullback coming that could potentially wake up. And as I discussed earlier, crude oil is, in my opinion, approaching this support here around $60 per barrel. Okay, traders, that's it. I hope that you enjoyed this presentation. As always, I will be with you next Monday. If you want some kind of a more analysis, make sure to track our feed here on TradingView or on YouTube if you're watching this on YouTube channel. And I wish you good luck. Be aware of the Fed. Markets could slow down a little bit, but then I think that we could see some volatile price action, okay? Especially in the yields. Traders, good luck. Bye.